Welcome back. Construction company Aveng nearly halved its headline loss per share, helped by improved financial performance at its Grinaker-LTA business on completion of loss-making contracts. Headline loss per share for the year to end June fell by 48% to 75.2 cents per share. This compared to a loss of 144.3 cents a year earlier. No dividend was declared.
Slow revenue growth in the construction industry impacted on Aveng. Although it reported a 65 million rand net loss for the year to end June, this was significantly less than the previous year's loss of 518 million. It says although it has not reached what it calls average market norms, it's edging closer, helped by stability of its management and its strategic interventions bearing fruit.
What was very negative for Aveng in terms of the SA operations, we had a substantial turnaround of people for many years, and we to a large extent have stopped that. I think we have no major people leaving the group in the last 2 years, and we have also made substantial changes in the senior management across the SA operations. But most of them is now in a situation where they've been there for a year or up to 2 years.
The construction industry is also weighed down by low levels of public infrastructure spend.
There's a general overcapacity, especially in the civil engineering space. If you look at us, if you look at our competitors, they have reduced people over the last 2 years, and they are currently under pressure for large projects. And for that you need major roads, bridges, rail contracts and those type of things. And there's still a substantial spend in the public infrastructure space, but more on the provincial and smaller contracts and not large projects where we are more geared to operating.
Aveng says it has concluded the sale of 4 infrastructure investments to Royal Bafokeng Holdings for 860 million rand. Nonetheless, it will press ahead with divesting from its steel business.
I think we're at a level where we can be profitable, but we cannot have decent returns. For that, you need a fundamental acceleration in terms of domestic demand, but also local market downstream. There's a fair amount of overcapacity. So it's either substantial growth or there need to be some form of consolidation in the downstream industry.
Vesta expects challenging conditions to continue in the short term, but is optimistic about positive effects of its strategic interventions over the past 2 years. Diabosito, SABC News, Johannesburg.